Well, the world has changed and we got a brand new president and the economy is shifting dramatically. So when you look at 2025, what are the investment strategies that you're going to use to win? Have you come to terms with the hard truth that you do not become wealthy by saving money? I mean, at the end of the day, on the two extremes, you've got the reckless spender that makes money just to let it go. And then of course, you've got the other people that are like, I'm going to save myself to financial freedom. I'm going to make sure that I accumulate enough money. And those people never have enough money at retirement either. Right in the middle, you find the investor. And today I'm going to be sharing with you 5 different investment strategies that will help take your money and put it to work. There's nothing worse than just leaving it in the bank, crossing your fingers and saying, I really hope something good happens. Nothing good is going to happen. The first of the 5 strategies is called index funds. I want you to think IRAs, 401ks, annuities, basically the stock market. And I am compelled to share this as one of the 5 strategies, but I will tell you right out of the gate that I hate this strategy. In fact, it's just been reported that the S&P 500 that used to deliver 10% returns, and in many recent years has only been at 8%, is scheduled to drop as low as 3% for the next decade. The idea is that if you take the most successful companies on the stock exchange who have already had their huge hockey stick, meteoric rises, and now they're just getting kind of piddly good growth and they're dependable and they're household names and these companies are here to stay, that if you can take an average from an index of these companies into a fund, that you should be able to do okay on your money. Maybe make 4 or 5 or 6 or 7%, maybe 8% if you're feeling lucky. And the reality is single digit ROIs or earning single digit returns every year is never going to get you wealthy. So I don't know if I would consider it an investment. I would consider it a smart place to put money if you're so risk averse that you want to guarantee that you don't have enough money at the end. Now, the reason why people get involved with indexes in the first place is because it is simple, right? Buying an index fund offers simplicity, reduced risk through diversification, and the potential for solid returns, even if they're single digit, basically allowing your money to grow with less effort. But there are some huge inherent risks. While diversified stock portfolios are generally safer, holding through market downturns is crucial to achieve long-term average returns. So basically, when the market goes down, you're going to be wetting your pants, you're going to feel like you lost money, and you just have to do nothing and ride it out, because on average, you'll get those single-digit returns. I hate it. Bottom line, is it better than like keeping your money in a checking account? Yes, index funds are better. But is it the best opportunity out there? No, I think that there's opportunities out there that make you a lot more money and they're no less risky. The second strategy we're going to talk about today is buy and hold real estate. Like if you're watching this video, ask yourself, do you own a home? And when it's time to get your next house, what would happen if you kept it and just rented it out? There's advantages to a long-term buy and hold strategy. In fact, in Thomas Stanley's book, The Millionaire Next Door, he reveals that the best way to become an accidental millionaire is to buy homes, and when it's time to move on, just keep the home and rent it out, and then you'll have 2 homes that are appreciating in value. Why is that important? Because as of 2024, the average American has $304,000 of equity in a home. Imagine after 30 years that you lived in 3 homes and you have over $300,000 in each home. That's like $1 million. But there is risk, right? You're getting into a business where you probably want to get a property manager involved unless you really want to deal with tenants and you want to, raise rents and treat it like a professional business. There's a lot of people that might let the home dilapidate or not take care of it or over repair it. It is a business where you want to have a mentor or property managers involved that can help you do it the right way. Because if you do, then over 20 or 30 or 40 years, you can actually make millions of dollars in the game of real estate. The third type of investment now gets a little bit riskier. It's called fix and flip. Some of the best deals that you'll ever see in real estate are these busted up homes that someone has just kind of let go to the dogs and it's going to need some huge renovation. Literally, the house is worth $300,000 in good repair, but maybe you buy it for under $200,000 because it needs $50,000 of work. And there's a profession out there where people will go and basically find these homes. They'll get them at a really cheap price. They'll take on the risk of their money or someone else's money to fix them up, put them on the market, sell them, and then hopefully have 20, 30, 50, 80, or $100,000 left over at the end of the day. If you want to know what 100 grand looks like in $100 Benjamins, it looks like this. And this could be a reward for doing a flip. This could be your reward for doing a flip. And this could be your reward for doing a flip, which means you could lose money if you don't do it the right way. A lot of potential upside, but then again, Fix and flipping isn't really an investment if you put your money at risk, but then you have to follow it up by doing work. One of my rules as an investor is you can have my time or my money, but you can't have both. And in the flipping game, if you're a professional, you have carpenters and contractors come in and actually do the fix-ups. So you're really just putting your money into the game, and that's how a professional does it. If you're gonna put in your time and money, you might be doing it wrong. Your fourth option is a very passive investment option. It's called the Kronos Fund. It's a real estate fund. Instead of going to the bank and putting a down payment on a property and saying, I'm gonna buy this and I'm gonna do the buy and hold strategy, you're basically saying, hey, Kris and his team own the Kronos Fund, and they basically find all these great investment properties in the top 5 markets around the nation, and they basically pull the money together, buy the best deals, get the highest ROIs, and then divvy out the profits. Everyone should eventually consider investing in real estate. This is a very passive option if you don't want to be very active in the game. And the Kronos Fund does give you access to massive real estate returns without the capital needed for a down payment. In fact, you can put in literally as little as $3,000 and now consider yourself a real estate investor. Over the last decade, between the years 2013 and 2021, we evaluated 2,130 rentals. And if I bought them through a bank with a 20% down payment, I was averaging 60% annual ROI. If I did it in my fund, I was averaging 27%. Now that tastes a whole lot better than just earning 4, 5, or 6% in an index fund. There is one disadvantage. If you're like, I think I want my money out early and it's before the prescribed time, you can't. You literally have to wait for the fund to mature. The fifth option is also one of my favorites. It has to do with real estate again. You can't blame me. I was a multimillionaire in my mid-20s, and that is by partnering with experts on expert deals. And partnership in real estate is basically a way to navigate the complexities without needing to get involved. It's a game of who you know versus what you know or where that property is even located. See, one of the best ways to bypass the skill ceiling when it comes to the competitiveness of real estate is to partner with someone who already knows how to play the market. For example, I've done $2 billion worth of transactions spread over 6,500 single family homes. That makes me an expert in the game at a level that most people can't compete with, and it's why I have really, really high ROIs. And I've got a model where people say, Kris, I got a 401k or IRA, I could put money in your Kronos Fund, or I could partner directly with you. And Kris, if I put in the money and your team does all the work, can we just split the profits equally? And I make that deal every single day. The most important step when actually putting a game plan together is to get an outsider's perspective that has won in the game. And if you would like to get my perspective on your financial game plan, I don't care if you're in a great financial spot, an awful financial spot, have really good credit, have really bad credit, there's always a game plan coming out of my mouth for how you can become a multimillionaire. And if you want to know what those steps are, and if you want to know how quickly you can get there, click the link below, request a free game plan. Me and my team will be in contact with you, and we'll share exactly what your custom game plan looks like to build wealth. Kris, a lot of your investment strategies have to do with real estate, but isn't there gonna be a real estate crash coming up? I think I've heard that from some people. Check it out. There are 7 major indicators that will tell you when there's going to be a real estate market crash. And here's the good news. Like, it's rocket science when it comes to the stock market, but it's not rocket science when it comes to real estate. And if you wanna know the secret to knowing how to time the real estate market, click right here. Let me show you.